Equity markets suffered a major pullback during the December quarter, with global equities ending down 11% in Australian dollar terms. Whilst listed securities were weak during the quarter, it was pleasing to see the infrastructure sector strongly outperform global equities during such weakness, with the FTSE Global Core Infrastructure 50/50 Index finishing the quarter up 0.1% in Australian dollar terms and down 2.1% in Australian dollar hedged terms. Markets were particularly weak during the months of October and December, and it was very pleasing that our strategy of focusing on core infrastructure assets held up well during these months. Disappointingly, this was undone by certain events in November. Our unhedged Australian dollar fund saw a negative return of 3.5% for the quarter, whilst our hedged fund produced a negative return of 4.5%, thus underperforming the sector. Over the last 2 quarters, we have spoken about Pacific Gas and Electric, a regulated electric and gas utility in California that was negatively impacted by devastating fires in 2017. We had increased our position through 2018 based on several factors, including our view that the most damaging of the 2000 fires was likely not caused by Pacific Gas and Electric's equipment. However, an ongoing risk that we had been very aware of in California was the risk of further fires. This risk transpired in a major way with the start of the Camp Fire in Pacific Gas and Electric service territory on November 8th last year, which became even more destructive than the 2017 fires. From a stock analysis perspective, it was extremely disappointing that a further low probability event occurred before our stock thesis was able to be tested. Whilst we still believe that valuation upside exists in Pacific Gas and Electric, we have not been willing to purchase additional stock as the business works its way through what may be a protracted liability process. Regular meetings with infrastructure companies, both on and off our focus list, as well as regulators, industry participants, and other stakeholders are core to our investment process. We use these regular meetings with companies to revisit the investment thesis, to test management on strategy and outlook, and continually reconsider and update our views on the risks associated with companies, sectors, regulators, and countries. In November, my colleagues Stephen Kempler and Jonah Boo undertook a research trip to South America, in which they had 26 meetings in Brasilia, Rio de Janeiro, Sao Paulo, and Santiago. The trip was timed to immediately follow the Brazilian presidential elections, which occurred during October, so as to reconsider whether there were any material changes to the stocks and sectors under coverage, and more importantly for our existing holdings in Brazil. At the end of the quarter, we had 3 portfolio holdings in South America, which made up approximately 6% of the portfolio. We continue to invest the fund in core infrastructure assets that possess high barriers to entry and strong strategic positions. These assets are mostly either regulated, subject to long-term contracts, or have been granted long-dated concessions. Overall, we see the sector as being attractively valued and with a good number of individual stock opportunities.